crypto, I think, is actually one of the few areas of venture capital that offers true asymmetric upside. I think you're going to see a lot of institutions start to leverage this.
In 2025, altcoins will make millionaires. Many of the coins you see here, different coins that we'll talk about in a future video, so make sure you subscribe. But 2025 is the year that not Bitcoin, but altcoins explode. How can I say this so confidently? Follow along today, watch this whole video. I want to set you up for the best 2025. And keep in mind, this is all just my opinion. This is not financial advice. If any of us truly could predict the future, we'd all be rich. But 2025 is the year that crypto OGs have been waiting for. It's always been 2025. Think about this. Bitcoin will be above all-time highs. Ethereum will be higher and stronger. With that, OGs like us will see our massive portfolio size and naturally want to move some of our profits into smaller caps for maximum gains. Now, at the same time, new people will be aping into crypto. They will feel like they largely missed out on Bitcoin, Ethereum, Solana, and they too will put a large chunk of their money into the smaller caps, causing altcoins to pump even higher. Smash the like button if you appreciate info like. And I've been in crypto a long time. I've seen this time after time after time. Guys, make sure you subscribe to stay up to date on everything going on in cryptocurrency. We show you stuff that the mainstream media never covers. That being said, one thing the mainstream media does report on fairly well, in fact, is traditional markets. If traditional markets are strong, crypto and altcoins will be that much stronger. So, will traditional markets be strong in 2025? Listen, the Fed has pivoted. The Fed is cutting now. Yeah, they could skip a month here or there, but we're going to see more cutting over the next 12 months. A lot more cutting. Even the most skeptical experts agree that future rate cuts are extremely bullish for the economy. Here, Ed Yardeni, this guy is a market strategist. He begrudgingly admits that every rate cut we have in the future will be extremely bullish for the economy.
Got to 50. Market thinks we're going to get a couple more cuts, maybe 25 and 25. So let's play that hand. Is that bullish for stocks?
Well, yes, I think it is bullish for stocks. I mean, the fact of the matter is, it wasn't too long ago when we were worrying about the Fed raising interest rates, and then why aren't they lowering interest rates? And now we're kind of saying, okay, what's more, give us more.
The only unknown right now is this. It seems like everybody is waiting for this presidential election to resolve. Everybody is waiting for either Trump to win and be the next president of the US, or waiting for Kamala to win and be the next president of the US. Everybody is waiting for this to be decided so that the unknown can then be dealt with. Now, volatility will be higher, of course, around this. But now is the time to start deeply thinking and acting on how you want to play this. Don't do nothing and just wait for this to play out. Now is the time to start acting. Joe Terranova, chief market strategist, gives you that warning here.
Had this week with institutional investors, with hedge funds, from being at Morgan Stanley for a day, talking to financial advisors. Everyone's treating the election like we'll worry about it when it's time to worry about it. No, we're 25 days away, and the election trades. This is the first election that I can remember where no institutional investor saying, I'm putting on this election trade. Everyone's saying we're going to sit back, we're going to wait for the election trades on the other side. And it's starting to get late for that. I think that's going to keep volatility high, and I think that it's time to start thinking about on the other side, where do you actually want to be allocated? I know it's difficult because everything's within a margin of error, but sooner or later, we're going to have that moment of resolution.
And of course, with all that being said, look what the smart money is doing. Look what the smart money is doing. The smart money earlier this year went deep into Bitcoin. We kept you updated and informed on how smart money was getting into Bitcoin every step of the way. Now it looks like they're turning to altcoins. Look, Van Eck establishes $30 million venture fund to support crypto and AI startups. Seems like just yesterday they got into Bitcoin. Now looks like they're hugely bullish on the altcoin space.
We see ourselves as a fintech fund first and foremost at the intersection of crypto and AI. Crypto is really the value layer, and stablecoins to us are very core to that thesis. AI is where you can take financial services that are typically represented by people and now turn those into software. So we're kind of assuming that a lot of the underlying technology here, whether it be the L1 blockchains or the large language models, have been commoditized to a point where now middleware and applications can leverage these primitives really to redesign and create kind of a net new internet native financial system.
Vanek is literally going on TV and saying, yes, this time is different. Unlike crypto's first 15 years, now, finally, is the time that we need to get involved with altcoins, because this time is so much different than ever before. Listen to their why.
Is this time different? And what do you see as the types of innovation most likely to succeed in this area that you might be interested in?
Yeah, I mean, I think this hype cycle might be different, right? This is the first time where you're seeing large institutions like BlackRock, like VanEck. Just the other day, Visa announced a stablecoin tokenization platform for banks to create stablecoins and launching that with BBVA. Similarly, I think a lot of that is driven by the fact that the technology has been battle tested, right? Stablecoins are going to settle over $24 trillion this year. Current supply sits around all-time highs at $170 billion. So it's hard to ignore this, especially when you look at the innovation that stablecoins create. Right now, you can take dollars, upload them onto Coinbase, send them anywhere in the world at the speed of a text message for free. And then that user can take that stablecoin from their wallet and deposit it directly to the bank account. So I think Wall Street and large institutions look at this and say, this is the future, especially when you consider the existing legacy rails. And most of fintech are just very thin layers that sit on top of legacy banking or financial system. Stablecoins take all those middlemen that charge excessive fees, that create slow settlement times, and replace them with software. And so I think you're going to see a lot of institutions start to leverage this. And tokenization for us really just builds upon the formation that stablecoins have already enabled. And now you can create net new assets and markets that were previously illiquid or hard to access. So I think it's going to create a Cambrian explosion of new fintech products over the next decade.
It seems like he truly understands the value of tokenization. He, like Larry Fink of BlackRock, thinks that the future is tokenized and he wants a piece of it.
Tokens are a really interesting instrument. They can represent things like the underlying ownership of the network, governance rights, cash flows, or sometimes passive yield through staking. And the structure of these tokens is that the project or company will go public much earlier in their life cycle, usually in the first 2 to 3 years. And so that provides earlier liquidity, better price discovery. In some cases, that hasn't worked out where you've seen intense volatility tied to the overall crypto asset class. But I think it's awesome. It reminds me a lot of, in the early days of the internet when companies like Microsoft used to go public at lower valuations. And, retail investors could benefit in the upside of that. Versus what we're seeing in the traditional venture world where there's an oversupply of VC capital. And the IPO markets are kind of getting tired of these ridiculous prices that they're coming out with.
You remember how Larry Fink was the first in traditional finance to start really saying this. Now it seems like so many others in TradFi are on board. Altcoin regulation is really going to open up in the US. You watch. Even current SEC commissioner, this is a guy who works with Gary Gensler, even Gary Gensler's peers are saying that the SEC messed up in such a big way with crypto and we need to fix it. Here's an SEC commissioner who gets confronted right at the top of the show. Listen to how he responds.
Well, it's great to be here.
What is the SEC doing regarding crypto?
Well, I think our policies and our approach for the last several years have been just really a disaster for the whole industry. We have been setting this policy through enforcement. We've done nothing to provide guidance on it. And as a result, this is being shaped by the courts. And different courts have ruled different ways. I think what this Wells notice is, and while I won't comment on the specifics of this litigation, what has gone on is part of a broader frustration with the fact that we have not provided interpretive guidance as to what you can and cannot do. And if you are involved in some sort of securities offering, how you register, how you get regulated as a broker-dealer, how you get registered as an exchange.
Look, guys, you can see what's happening. I think the market is really going to start picking up, particularly as we get closer to 2025. And we'll be releasing new 2025 low-cap altcoin videos, so you won't want to miss those. Subscribe, and I'll see you tomorrow.